Chairman Powell, somebody's doing something right. I don't know if it's the president or you or a combination of everything. I think this is the best economy I've seen in my lifetime at this point. Now, the question is, how do we keep it going? How do we keep it going? That's part of your job, not totally, but you're into the money. How do you gauge inflation, for example? You know, there are a lot of ways to do it. That's one. You're talking about price stability, maximum employment. Price stability, you're talking about the stability of the monetary policy, the value of our currency and everything that goes with it. How do we keep this economy going, in your judgment?
So I think you said it very well. We want to use our tools to sustain this expansion and keep the labor market strong and keep inflation near 2%. That's exactly what we're trying to do. And so we look around and what do we see? We see a labor market that is strong and continuing to strengthen. Job creation is strong. Wages are moving up. So that's a very healthy thing. With inflation, we see in muted inflation pressures. Even now with really historically low unemployment and a great recovery, an ongoing recovery in the labor markets, we still see muted inflation pressures. And that gives us the ability to be patient with monetary policy. And that's what we're going to do. The committee has decided that with our policy rate in the range of neutral, with muted inflation pressures and with some of the downside risks that we've talked about, this is a good time to be patient and watch and wait and see how the situation evolves.
How does the abundance of hydrocarbons that we have found in this country in recent years, which is prices everything, how does that feed into the economy in a positive way?
Well, in a couple of ways. One, it's a big industry. We have a very large energy industry now, thanks really to shale. In addition, if you think about that employs a lot of people, and that's a big thing in certain areas of the country. 5 or 6 major areas of the country have a lot of employment and economic activity. Interesting on inflation, if you look back to the 70s, a lot of what set off the bad inflation outcomes in the 70s was an oil shock. Mm-hmm. What we have in our very large domestic oil industry now is, in effect, a shock absorber, because when oil prices go up, American shale producers and other oil producers will produce more oil. And so that offsets that shock and will prevent that shock from driving inflation up here. So it's been a real positive for our economy from a number of perspectives.
Mr. Chairman, how important is the certainty of good trade agreements to our economy and to the world economy?
Well, uncertainty is the enemy of business. Absolutely. And businesses, they want a set of rules, they want an established, transparent set of rules, and they want to play by those rules, be able to make longer-term plans, investments, and hiring, and that kind of thing. At the same time, we need the trade. We're not responsible for trade. We don't comment on trade policy at all. But we've been hearing a lot from our contacts around the country, really all year, this year and all last year, about uncertainty, and we do sense it's been holding back some decisions, probably had some minor effect on confidence and maybe activity. But overall, certainty around trade and other government policies is very important.
As we look at our current account, the imbalance of trade with most of the world, does that concern you? And if it does, why? You know,
the overall current account is set economically by the difference between savings and investment. Absolutely. in our country. So it's really an identity that kind of works that way. It tends to go up in good times when Americans are mm-hmm. at work and earning well and buying things, and the economy is strong. We tend to buy things. Some of those things tend to be imported. The trade deficit and the current account balance can go down quickly in bad states of affairs. Of course, over time, we'd like to see balance both in savings and investment and in the trade balance.
I don't have much time left, but we've discussed this before, cost-benefit analysis. Last year, when you came before the committee, we discussed here the formation and the policy effectiveness and assessment unit to conduct cost-benefit analysis on regulations. Could you provide here an update on the work of the entity here and what What have you learned and what's going on?
Yeah, so that unit is up and running now, and it's a relatively new undertaking. Cost-benefit analysis is something we've of course done really always, and particularly in the last decade or so, we've upped our game. Now we have a particular unit focused on it. We're very pleased with the progress it's making, and they're involved in the rulemakings and assessment of everything we do. So it's a positive development, and we look forward to making it ever stronger.
My last question to you is, a few seconds I have left, is what's the health of our banking system that you regulate as with the Federal Reserve, our biggest banks?
I think our banking system overall is quite strong. Record profits, no bank failures, I think, in 2018. Much higher capital, much higher liquidity, better risk management. Stress tests have really focused banks on understanding and managing their risks. We've got better resolution planning. Overall, I think our banking system is strong and resilient. We never take it for granted. We're always looking for problems and cracks, but I would say overall our banking system is strong.
Thank you. Thank you, Mr. Chairman.